guys, Brad here from The Guided Investor. Welcome back to another video. If you're new to the channel, consider hitting that subscribe button because I post regular videos about how you can do more with your money. Depending on who you talk to, there's different definitions of what defines a recession, but it's generally accepted and believed that if a country goes through 2 quarters of negative GDP, that's gross domestic product, then that is a recession. Now, it is looking very likely, if not certain, that due to this coronavirus worldwide, we are heading into a global recession. But the real question is it going to be a technical recession that recovers after a couple of quarters? Or is it going to be more of a prolonged, sustained recession like we saw with the GFC, or even worse? The truth is, nobody knows. So that's why I want to give you my thoughts on what the recovery will look like from this coronavirus under 3 different scenarios. We're going to look at the V scenario, we're going to look at the U scenario, and we're going to look at the L scenario. And based on those different scenarios, I'm going to give you my thoughts as to which ones I believe are most likely, given what we know today. So the first and most bullish scenario is that we get a V-shaped recovery. That is where share prices continue to fall sharply, hit the bottom, and bounce back quickly. Now, this would be the best scenario for businesses, investors, and basically everyone except those shorting the market. But in order for this scenario to happen, we need to see the following. The most important thing we need is for the fear to stop. We need either a cure for this virus, or we need to see the number of infections start to fall, and we need to see this soon. This would need to happen within the next 1 to 2 months for the V scenario to occur. We need businesses to remain in business to keep employment high. A lot of businesses are shutting shop at the moment, and that can be sustained for the short term. However, if businesses stay shut for an extended period and have no revenue, they will start closing down and letting go of their employees. That is why we need the coronavirus to have a cure or drop off pretty quickly. With the virus a non-issue and employment high, we would be left in a situation where monetary policy and fiscal stimulus is at a high, and that will drive markets up very quickly again. All over the world, governments and central banks have been pumping stimulus into the economy via ways of direct cash injection, money printing, cost covering, interest rates cuts. All of this is fuel for the markets to rise again. And if you think about it from an investor's perspective, assuming the virus is no longer an issue, would you keep your money in cash and earn less than inflation? Or would you invest it back into the stock market when yields are at a high? You're basically forced to go back into the stock market if you want any kind of return on your money. Now, this is the V-shaped scenario, and I give this scenario about a 20% chance of occurring, and to be honest, that 20% chance is dropping every single day. Because in order for this scenario to happen, like I said, we need to see a cure, or we need to see the infection rate decline very quickly, which at the moment, it seems to be going the opposite way. So the V-shaped scenario is not the most likely scenario. And if this scenario did happen, then we'd have to look at the impact of inflation worldwide, but that's a whole nother conversation. The second scenario that we could potentially see is a U-shaped scenario. This is basically where stock prices fall heavy, remain low for an extended period of time, and then rise again in the future. And in order for this to happen, we need to see the following. The virus continues to be an issue for an extended period of time, much longer than 2 months. As a result of the virus lingering, people remain quarantined and businesses shut shop due to lack of revenue. This leads to unemployment rising for a relatively short period. A cure is found and distributed within 12 months, and the fear dissipates. Strong businesses have survived and prosper, and new businesses start to form again. Again, we're left in a position where interest rates are too low to hold your money in cash, and therefore people eventually start buying back into shares. This U-shaped scenario is my most likely scenario. I give it about a 70% chance of occurring, and as a long-term investor, this scenario is okay with me. I can start buying shares now, I'm willing to hold them for the long term, and I do believe in the future we will get that recovery. Now, I'm not saying we're at the bottom of the U just yet. If someone were to ask me where the bottom is, the truthful answer is I have no bloody idea. No one does. But if I had to have a guess, I'd probably say that there's a little bit more downside yet to come before we start to see the recovery. But if I take a long-term view, share prices at the current level are looking attractive. The third scenario is an L-shaped scenario, and this is where share prices drop sharply and don't recover for a prolonged period. Now, you might be thinking that this could never happen, but to be honest, it happened back in 1989 to Japan. The Nikkei was at around 39,000 and it fell sharply, and today it's sitting at around 17,000. It never recovered. Now our situation is very different to Japan, and in order for this scenario to occur, I believe the following needs to happen. The coronavirus becomes a long-term health issue that we just can't squash. Unemployment remains high and business confidence remains low for the foreseeable future. Stimulus does nothing to help. As a result of the downturn, people's spending habits change. People basically stop spending money, stop traveling, and just focus on life's essentials. In other words, consumer demand falls systemically. Now, personally, I don't think this is a likely scenario. I give it about a 10% chance of occurring. I'm optimistic that as humans, we're able to overcome a lot of obstacles that are thrown in our path, and I think this coronavirus we will overcome. Now, in the long run, I think business will bounce back. I think that, things will go back to normal, provided that the government doesn't implement any crazy measures in the short term, which has a long-term impact on our economy. So moving forward, no one really knows what is to come. Things could get a lot worse before they get better. But I do want to stress to you again that don't make financial decisions out of fear. When investing in growth asset classes such as shares, it comes with volatility, and you need to be able to ride out that volatility. But remember that in the long term, if you look back on history and take any rolling 20-year period, shares has outperformed every other asset class. For me, this is still a great time to buy some really good quality long-term shareholdings. Now, I'm not saying chuck all your money in at once. We don't know what's going to happen. So just if you've got the money to invest, then, stage your purchases. Put a little bit in, wait for it to drop, put a little bit more in, wait for it to drop, put a little bit more in. If it finds some support, put a little bit more in. And that way you're averaging your bets. However, everyone's situation is different, and just because it's appropriate for me to buy shares doesn't mean it's appropriate for you to buy shares. First of all, you need to have security of your income. You need to have your emergency fund in place, and you need to have your debts under control. If you don't have those three things, then no matter how cheap the shares look, you shouldn't be buying them. That's it for this video, guys. Please take care of yourselves in these crazy times, and let's all do our bit to help each other out in these times of needs, and let's squash this virus.